This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Great expectations. Stocks finish at records just as corporate America gets ready to report their earnings, and the bar is high.
Forging ahead, the president meets with Republicans and Democrats on immigration, and some of the country's biggest companies are watching very closely.
Class is in session. In a first, a public high school has been built on the campus of a Silicon Valley company, putting a new spin on technology in the classroom. Those stories and more tonight on Nightly Business Report for Tuesday, January 9th.
Good evening, everyone, and welcome. How about we start tonight with some fake news for a change? For a change, stocks didn't set fresh all-time records today. But you know better than to believe that. They did it again, and there's no oops attached. The major indexes, all of them, closed higher today than ever before. You've heard that a lot lately, but here's something you haven't. The S&P 500 is having its best start to a year since 1987, and not since 1964 has the S&P 500 set 6 consecutive records to begin a year. Investor optimism is high. Here are the happy and not at all fake numbers for the day. The Dow advanced 102 points to 25,385. NASDAQ added 6, and the S&P 500 was up 4. Now comes the moment of truth. Quarterly profit results. And as Bob Pisani reports, expectations are very, very high.
It's been an amazing start to the year. The S&P is up 6 days in a row. It's about 3%. Its best start since 1987. Earnings season is now upon us, and with prices and valuations at record highs, it's fair to say expectations are also very high. This past quarter has been very unusual. Analysts have been even more optimistic than they usually are. They typically start optimistic and then they lower earnings expectations into the quarter, but that didn't happen in the fourth quarter. With prices this high, investors are clearly hoping there will be bigger beats than usual and will likely punish companies with inline or disappointing numbers much more than usual. And guidance is also an issue. Of the companies that gave guidance each quarter, only 1/3 will typically raise the guidance, 2/3 lower guidance. But thanks to tax cuts, investors are expecting more companies to raise their guidance than typical. That could be a problem, particularly since many companies are still not entirely sure of how much the tax cuts will help their earnings and may be reluctant to say anything this early. Then there's buybacks and capital expenditures. Again, thanks to tax cuts, investors are expecting companies to announce some combination of more buybacks or increased capital expenditures. So can the CEOs really deliver on these high expectations? It's a pretty tall order, but their early returns give some cause for optimism. So 19 companies in the S&P have reported earnings so far. Oracle, Carnival, Darden, Walgreens, FedEx, CarMax among them. The average earnings growth has been 18%. Sales have averaged 11% growth. That's good. That's well above current expectations of a gain of 11% for earnings and 7% for revenues. We'll see what happens from this point on. If the companies start pushing buybacks and more capital expenditures, it's possible this rally could just keep on going. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So let's pick up where Bob left off. Will earnings growth fuel the next leg of this Wall Street rally? Here to discuss that and offer some insight into who may be the winners and losers this earnings season is Art Hogan, Managing Director and Chief Market Strategist at B. Riley FBR. Good to see you, Art. Nice to have you here.
Thanks so much for having me. Good to be here.
You know, earnings season, what are your expectations? We've said the bar is very high. And Bob really repeated that in his report. So what are you going to be looking for in these upcoming reports?
Well, 3 things. We want to see continuation. I think Bob pointed that out very well. Typically during a quarter, we start out very optimistic, and the average drawdown in estimates is about 4%, 4.2% over the last, call it 5 years. That's been average. We've only drawn down estimates for the fourth quarter by 0.3%. So we really haven't lowered the bar. I think that's pretty healthy. I think the second thing you really want to look at is what do companies say about guidance? So that'll be great. An 11% earnings on average with 7% revenue growth would be terrific. It'll look very much like the last 2 or 3 quarters. But the guidance is going to be very important because this is the first time we're actually going to hear from corporate America just how much their effective tax rates are coming down and what does that mean for earnings in 2018. So as much as I think this will be a great fourth quarter earnings reporting season. It's going to be the most confusing and interesting and important guidance season for 2018. I think accountants are going to be very busy trying to figure out what the effective tax rates are heading into next year.
I believe you believe, and I've heard an awful lot of people say that it's going to be a bit of a rough quarter for financials, but that's in the rearview mirror, and a lot of those financials are going to take charges, sort of kitchen sink it all, but that the rest of the year going forward might be pretty good for financials.
Yeah, I couldn't agree with you more on that, Tyler. I think that comes in three flavors, right? So the tax reform in and of itself is good for financials. They're typically higher taxpayers. So the effective tax rate for the financials is in the 30s, and that'll go down to the 20s. So there's, sort of a 10% tailwind that comes in there. Repatriation money, that sits somewhere typically in financials domestically versus financials internationally. That's a benefit. But rising interest rates. The Street thinks the Fed raises rates 2 times this year. The Fed thinks they're raising rates 3 times. And, we're seeing the yield on the 10-year move up above 2.5 for the first time. And the spread between the 2s and the 10s has broadened out. So we're, a lot of things that were a headwind for banks are going to be a tailwind heading into 18. They're probably the number one sector in terms of how we think tax reform, deregulation affects sectors in the next year.
You say there are a couple bumps in the road possibly on the fundamental side of things. What are they?
Well, first and foremost, obviously trading at 19 times, we're pretty fully valued, right? And we think that 19 times is probably appropriate in the current environment with very low interest rates and very low inflation. So if we do get a surprising uptick in inflation, I certainly think multiples come down a bit. If we see interest rates go up, I think multiples come down a little bit. I don't think that happens in the first half of 18, but keep a close eye on inflation, readings on inflation. We'll see the CPI and the PPI later on this week.
Okay.
And as we head into 18, I think that's one thing to look out for.
You're also watching for a possible government shutdown, maybe some Korean dialogue that may be a little bit incendiary. So we'll keep those all in mind. Art, thank you so much. Appreciate it. Art Hogan with B. Riley FBR.
The price of oil rose to its highest level in more than 3 years. Domestic crude gained 2% to settle at nearly $63 a barrel. OPEC and Russia keeping supply limits in place to help reduce an oversupply of the commodity. It's expected that U.S. inventories will fall for an 8th straight week.
In Washington, President Trump pushed for a bipartisan agreement on immigration. Speaking during an extended meeting with congressional Republicans and Democrats, the president suggested a 2-phase approach. First, a deal for the so-called Dreamers, and then a comprehensive agreement.
I also think that after we do DACA, and I really believe we should be able to be successful, I really think we should look in terms of your permanent solution and to the whole situation with immigration. I think a lot of people in this room would agree to that also.
Big business will be watching how these talks play out, since the issue has always been an important one to the economy. Elon Mui has that part of the story.
As the battle over immigration heats up here in Washington, many workers are worried they'll be left out in the cold. Special protections for the undocumented children of illegal immigrants, who are known as Dreamers, will expire in March. About 800,000 people will be affected. 91% of them are employed, including at some of the biggest companies in America. Daniela Vieira came to the United States as an undocumented immigrant from Brazil when she was 11 years old. Since then, she's graduated from college and landed a job as a financial analyst at Johnson & Johnson. Her protected status allows her to work legally. Losing it could mean losing her livelihood as well. So she's sharing her story with lawmakers here in Washington and with her company's CEO.
He told me that he was keeping my story in mind, and I've tried to raise awareness of these issues at work because I'm confident that there must be other Dreamers in my company, but it's very scary to come forward and disclose your status.
Johnson & Johnson is part of a broad coalition of major corporations that are backing a path to citizenship for workers like Daniela. By one estimate, forcing all Dreamers to leave the country would cost the U.S. economy nearly $500 billion a year.
How can we help these people, gain their appropriate rights in the United States? How can we make sure that they can be drivers of the economy? That's what this is all about.
Both Republicans and Democrats say they're determined to find a solution. But compromise remains elusive, and Daniela Vieira's American dream now comes with an expiration date.
We're desperate. We don't want to lose our jobs. We don't want to lose our home, and we don't want to have to go back to some place that we've never known.
For Nightly Business Report, I'm Elon Mui in Washington.
Nearly 1 year after Donald Trump became president and promised to stop America's growing demand for autos built in Mexico, the numbers have not improved to his liking. In fact, they've gotten worse. New data show the number of auto exports to the U.S. hit a record high in 2017. Phil LeBeau has more now on the surge in Mexican-made cars and trucks.
The Mexican-made car and truck is still very much a staple of America's auto industry. In fact, the number of vehicles exported from Mexico to the U.S. jumped almost 10% last year, an all-time high of more than 2.3 million autos. What's behind the increase? America's growing appetite for SUVs like the Chevy Equinox and trucks like the Ram 1500 pickup. Through November of last year, Fiat Chrysler, which builds the Ram, and General Motors both saw huge spikes in exports from their plants in Mexico, while Ford was down almost 20%. That's because Ford primarily builds cars in Mexico, and their sales are down as more people look to buy bigger vehicles. For President Trump, the numbers show that his threats to slap a big border tax on Mexican-made vehicles has had a limited impact. Yes, Ford scrapped plans for a final assembly plant in Mexico after repeated attacks by the president. And several automakers, including the big three, have said they'll invest billions of dollars expanding auto plants here in the U.S. Still, Mexico's auto industry is only getting stronger. It exported a record 3.1 million vehicles last year, with 3 out of 4 coming north of the border. All of that could change if the Trump administration follows through on threats to alter or tear up the North American Free Trade Agreement, a move that could add thousands of dollars in taxes to vehicles built in Mexico. But until that happens, GM and other automakers will continue building south of the border. GM says that the demand for trucks and SUVs here in the United States is one reason why it continues building in Mexico. The plants here in the U.S. that also build those trucks and SUVs are running at capacity. So there's nowhere else to build those vehicles that are in demand except for also to build them in Mexico. Phil LeBeau, Nightly Business Report, Chicago.
And to read more about Mexican car imports, please head to our website, nbr.com. And separately, the White House today said the president will travel to the World Economic Forum in Davos later this month. It is a gathering of world leaders and business executives.
Still ahead, connected homes, connected people, and connected cities. It could be a big part of your future.
Apple responds to 2 of its investors. As we reported yesterday, JANA Partners and CalSTRS urged the iPhone maker to take a socially responsible approach to helping parents navigate smartphone use among children. And in response, Apple says it will introduce new features to help parents protect children, and that, quote, with today's iOS devices, parents have the ability to control and restrict content, including apps, movies, websites, songs, and books, as well as cellular data, password settings, and other features.
Intel's CEO says the company will issue updates to all of its processors released in the past 5 years. They will do that before the end of the month. The announcement was made at a conference in Las Vegas, and it follows the disclosure of massive security vulnerabilities in its chips that we told you about last week.
For our processors, products introduced in the past 5 years, Intel expects to issue updates for more than 90% of them within a week, and the remaining by the end of January. We believe the performance impact of these updates is highly workload dependent.
Those security flaws could theoretically allow malicious programs to steal data, including passwords, personal photos, and even emails.
Well, that was just one of the hot topics discussed at the CES conference in Las Vegas, which gathers a who's who in technology. It's also the place where new gadgets and devices are put on display that the makers hope will change the world. Julia Borston is there.
The Consumer Electronics Show is drawing 170,000 attendees and 4,000 exhibitors, checking out the latest gadgets and software. Attendees are also listening to big-name CEO keynotes. The show's organizers, the Consumer Technology Association, drawing fire last year for not booking a single female keynote, responding this year by adding photos of women speaking on big panels to its keynotes page, including the CEO of A&E Networks, Nancy Dubuque. Dubuque and others weighing in on the future of TV, as Hulu, a year after announcing a streaming TV package, announced it now has 17 million subscribers between its live and on-demand offerings, up from 12 million back in May 2016. This as companies from Verizon to Disney invest in more direct-to-consumer offerings launching this year.
Connected homes, connected people, connected cities are happening. Content is one big piece of that future.
Another big tech trend here at CES, the exploding category of voice assistants. Amazon, Google, Roku, and others all battling to sell to the nearly 70 million people expected to use these voice devices by next year.
Google announcing here it's integrating its voice-powered assistant into more devices, including Android Auto in your car display and new ways to control your home.
But what we're really excited about is a new category of devices called smart displays. And so this is where you have an assistant who can hear you from a distance, who can answer your questions out loud, but also with a display that, when it makes sense, can show you what you're seeing.
Rival Amazon is also making a big statement at CES, using this RV outside the convention center to showcase all the ways its voice assistant Alexa can be integrated into your home.
Alexa, turn on movie time.
Okay.
And going up against those giants, Roku.
So we announced Roku Connect, which makes it super easy to connect audio devices to your TV.
Roku looking to make Roku TV the center of the connected home, as it and its rivals look to voice assistants to make it easier to find and watch or listen to more content than ever. For Nightly Business Report, I'm Julia Borston in Las Vegas.
Boeing delivers a record number of airplanes. That's where we begin tonight's market focus. The aerospace giant capped off 2017 with 763 deliveries, its most ever in a year. Boeing said those results were helped by global economic growth and strong airline profits. The company is also optimistic on cargo and customer passenger trends for this year. It expects passenger capacity to increase as much as 6%. Boeing shares soared more than 2%. to $318.43. A stronger than expected holiday season led Target to raise its fourth quarter and full year earnings forecast. The retailer said shoppers had an appetite for a variety of items during the period, pushing sales up nearly 3.5%. Target initially expected sales to max out at 2%. Shares rose nearly 3% to $69.14. The clothing chain Express said it struggled to get shoppers into its stores during the holiday period, and as a result, the company is slashing its earnings and its sales outlook for the quarter and the full year. Express shares plunged 20% to $7.37.
Boston Scientific reported preliminary results for the year that outpaced expectations. The medical device maker expects earnings for the quarter to fall in line with estimates. Shares of Boston Scientific up 8% on the session to $27.96. The lighting company Acuity Brands said tepid market conditions caused sales to fall more than expected in its latest quarter, and that drop also weakened profits. Those were also below analysts' expectations. How about shares? Well, they fell 15% to $157.95. The cloud computing company Akamai Technologies reportedly working with Morgan Stanley now to explore a potential sale. Bloomberg says the company is under pressure from activist investor Elliott Management and is exploring so-called strategic alternatives. Shares up almost 2.5% at $67.49. Nordstrom, after the bell, said rising sales at its off-price Nordstrom Rack brand helped overall revenue and same-store sales pick up gains during the holiday season. The retailer also upped the lower end of its full-year earnings guidance and now expects net sales to rise more than 4% for fiscal 27. Shares volatile in after-hours trading. You can see that on the chart. They ended the day, the regular session, down a fraction at $47.89.
It is January, so for most of the country, it is cold. But as temperatures drop, a number of stocks tend to heat up. Dominic Chu has a list of names that have historically been winter winners.
So are there stocks that perform better during the wintertime? Well, we asked our data partners over at Kensho to take a look at the 10 winters that we've just seen. Now, we define winters as the end of November through the end of March each year. Turns out a handful of stocks actually do quite well during those seasonal times when things get really cold. Check out, for instance, shares of Home Depot, the home improvement retailer. If you're out there buying shovels or snow, salt, anything like that to melt the snow out there, maybe you're going to Home Depot. Those shares actually perform well, up an average of 11% during that time period each of the last 10 winters. It's a positive trade 80% of the time. Also, Netflix, people talking about hunkering down, binge watching your favorite shows online. Well, those shares of Netflix up about 35% on average, positive trade 80% of the time. Now, Netflix obviously has a lot of other things going for it, but still maybe part of the story there. AutoZone, are you out there buying antifreeze for your car, maybe batteries, scrapers for your windshield? Those shares up about 11% on average. It's a positive trade 90% of the time. Domino's Pizza, out there ordering pizza because it's too cold to go out and eat yourself? Well, that trade is up 24% of the time on average, 90% positive trade for Domino's Pizza. And then VF Corp, the company behind big outdoor gear brands like Timberland boots and North Face jackets. That company and that stock on average up 7% during the winter months over the last 10 years. It's a positive trade 10 out of the last 10 winters. Now, it's not to say that all of these trades will play out again this time around, but when it comes to the cold weather in the winter months, sometimes people look towards some of these types of stocks as possible investment opportunities. Of course, history is just a guide. We'll see if it actually comes true this time around. For Nightly Business Report, I'm Dominic Chu.
And coming up, education meets technology, resulting in something that's never been done before. But first, Treasury yields. They're on the rise, the 10-year now yielding around 2.5%.
Remember Eastman Kodak? I bet you do. That company was once a leader in camera and film before falling on hard times. Today, it is making a big switch. Kodak is joining the cryptocurrency craze. It plans to launch Kodak One, a blockchain-based image rights management platform, and Kodak Coin, a photocentric cryptocurrency. The small cap stock had a Kodak moment, surging 119%.
We told you about a former Google employee who was fired after he wrote a memo criticizing the firm for pushing diversity. Now he's filing a class action lawsuit along with another former employee against the tech company, citing discrimination. Both men say they were ostracized, belittled, and punished for their political views. The complaint seeks monetary damages.
Tech companies are pushing into America's classrooms. They supply laptops and software programs and learn-to-code lessons. But Oracle is taking it one step further. They're putting an entire school on its corporate campus. Aditi Roy is in Redwood City, California for us.
Welcome to Design Tech High School, a new $43 million state-of-the-art public charter school. But what makes the school one of a kind is that it sits on the campus of Oracle, the first ever public school built on the campus of a tech company.
Welcome to the Design Tech High School's new home at Oracle.
D-Tech students like Jolene Latif take classes on subjects like coding or wearables. That's where she and another student came up with the idea of an anti-theft purse. Oracle helped the team get a patent. The students eventually want to bring it to market.
It feels so cool to know that an idea that I had actually got the opportunity to be brought to life and developed to this stage.
It's just one example of how Oracle is partnering with the school, which has been around since 2014. Oracle was involved early on, but now that they're neighbors, the school is leveraging Oracle's resources more than ever before. Employees are mentors. Students can intern across the street. The basketball team will even practice in the company gym, and company shuttles will be used as school buses. And students can work on their product prototypes in the two-story design realization garage.
It's not just this building is amazing and it's great, but the real potential that exists for us is
all the Oracle employees that are on the other side of this building.
While it may seem the students are being primed to someday work for Oracle, the company says that's not the point of its involvement.
It is a long-term kind of leap of faith investment. So that's what philanthropy is. You try and make the best intervention that you possibly can.
The event comes amid a national shortage of software engineers, and U.S. students are behind their peers internationally in STEM achievement, according to the Pew Research Center. It's not just Oracle. Other tech companies have also been heavily involved in education. Google supplies apps and Chromebooks for half the primary and secondary students in the U.S. Salesforce has pledged $100 million on San Francisco public schools, and CEO Mark Benioff is hands-on, meeting with principals and treating the project like a venture capital fund. And Facebook has developed Tech Prep, a website that teaches students how to code. But tech's involvement in education hasn't always succeeded. In 2010, Mark Zuckerberg donated $100 million to New York public schools, but the money failed to turn the schools around. Still, students here say their new home makes them feel like anything's possible.
Being here on Oracle's campus is, it feels like we're finally home.
There are some skeptics who worry that Oracle will be too involved with the school, but Design Tech's co-founder tells us Oracle has assured them they will run as an independent school. For Nightly Business Report, I'm Odidi Roy, Redwood City, California.
Before we go, here's another look at the record day on Wall Street. The Dow advanced 102 points. NASDAQ added 6, and the S&P 500 was up 4.
That'll do it for us tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Matheson. Have a great evening, everybody, and we will see you tomorrow.